If you gave me 5 million Kenyan shillings to invest today, here's exactly how I will allocate the money strategically, safely, and for maximum returns. This is part of my How I Will Invest series, where I break down a step by step how I will personally invest different amounts of money from 10,000 all the way up to 10 million across Kenyan's best performing and regulated investment vehicles. So in this video, I will show you how I will balance between money market funds, SACCOs, treasury bonds, real estate investments, special funds, Nairobi securities stock, and even a small percentage allocation on personal development and skills development. Because the best performing portfolio still needs an investor who is growing and who is capable to manage that particular funds and to multiply it to be even a much more a much bigger fund, a much bigger amount. So I'll start by setting up the framework for my investment. And at this level, at 5 million, investing is not just about making money. It's about building structured wealth that works for you and the generation to come. So this is the framework that I'll use. I use this framework for all my investment advice. So I look at safety and liquidity. What vehicles will protect my capital and stay flexible at the same time? Number two, I will look at income and stability. What vehicles will be able to generate for me consistent income and predictable returns? Number three, I will look at growth and appreciation. What investment vehicles are able to build long-term wealth? And finally, I will look at personal capacity, ability to invest in myself so that I can keep scaling upwards, managing money, and earning more money from the skills and knowledge that I personally would have acquired. Now, let's break down how I will invest 5 million Kenyan shillings. The very first one, and the one that I've always advocated for, is I will allocate 20% in a money market fund. 20% in a money market fund. 20% of 5 million is 1 million Kenyan shillings. Now, why money market fund? Money market funds provide daily interest, high liquidity, and capital safety. And this makes them a perfect for both emergency reserves and short-term opportunities should they arise. In 2024, the leading money market funds were offering between 9% to 11% annual net return. Now, before choosing a money market fund, I always say make sure that the money market fund that you settle on is regulated by Capital Markets Authority. I did some math, and if I pick a 9% return, remember I've said that money market funds are offering between 9 to 11%. I want to go with the minimum. So if I invested 1 million and I am going at, for the purposes of this video, I'm going at with the 9% returns, the 1 million will give me 90,000 Kenyan shillings per annum in terms of payout. So at the beginning of the year, I invest 1 million in a money market fund. At the end of the year, it will give me a 90,000 Kenyan shillings. And investment in money market fund is my financial buffer. This means that the money is safe, the money is accessible, and the money is still earning returns and interest above the inflation rate, which is around 4 or 5% in Kenya right now. I will allocate, after money market fund, I will allocate. Now, I am building, I wanted to illustrate this with Legos or these blocks. And so this is how our investment portfolio will look like. So we've got our 20% money market fund. So let's go to our next 20%. So I will allocate 20% to SACCOs, and 20% of 5 million is still 1 million Kenyan shillings. Now, I will have to make sure that the SACCO that I put this money in is licensed by SASRA, and it has got a strong track record of dividend payouts and good governance. What is SASRA? I've talked about this. SASRA is SACCO Society Regulatory Authority. This is the government agency that is but responsible for licensing, supervising, and regulating savings and credit cooperative societies, basically all the SACCOs. Now, SACCOs typically deliver between 8 to 12% annual returns on dividends, and they also offer affordable credit facilities that are perfect for medium and long-term wealth building. At an average of 10%, if I invest 100, if I invest 1 million in SACCOs, they'll be able to give me 100,000 per annum in annual dividends. This portion of money provides, basically investing in a SACCO gives me stability, assurance, consistent income, and access to leverage in terms of credit facilities or loan facilities anytime I need to do a bigger project. So I'll do our 20% in the SACCO. Let's continue. Now, I will allocate 25% of the 5 million in Treasury Bonds. 25% of 5 million is 1,250,000 Kenyan shillings. For guaranteed and long-term income, I'll do the 25% in T-bonds. Treasury bonds, we've said this before, that they are issued by the Central Bank of Kenya, CBK, and they are amongst one of the safest investments that are available. And I'll specifically look at infrastructure bonds. And infrastructure bonds have averaged between 14% to 17% returns per annum. And this interest is paid every 6 months. So you divide that percentage by 2. The interest paid is paid after every 6 months. So I've not gone with 14 or 15 or 16%, but I've gone with 12%. So if I invest 1.2 million at 12% per annum, these bonds will give me at an average return of 300,000 Kenyan shillings per annum. When selecting the bonds, I will split this money across either the 5-year tenure, the 5-year tenure period, the 10-year tenure period, or the 20-year tenure period maturities to balance liquidity and long-term compounding. So I'll split my 1.25 million in different annual tenures to balance liquidity and long-term compounding. In my diagram, my Lego, you'll be able to see that we did 20% money market funds, we did 20% in SACCOs, and we have done 25% in treasury bonds. It's a slightly higher margin, a higher investment. Why? Because of the safety, because we are investing this money in a government facility, in a government investment vehicle. So it's a bigger, and so I can comfortably allocate a bigger portion of money into treasury bonds. It's bigger, it's guaranteed, it's safe, and it's secure. So that's the 25% in the treasury bonds. Next, we will do 15% in real estate, and this can either be land or REITs. REITs refers to real estate investment trust. So at 5 million, when you have 5 million, real estate becomes essential because of relatively higher returns. So I would allocate 15% specifically to REITs. Now, I have the option of buying land or investing this money in REITs, but I want to specifically go to REITs. When buying land, I will not, for this purpose of this video, I will not buy land, but will put this money in REITs. If you want to buy land, look at high growth zones or areas, Nakuru, Kiambu, Naivasha, these high growth zones. But I'm going to to go with the rates that's listed on the NSE. In 2024, and I'm going to give us two examples. In 2024, two rates, I'll compare two rates. Ilham Fahari I-rate reported an annual average of 11.4% yields in 2024 and by mid-2025. Econ D-rate reported 11.1% in the financial year of 2024. It's worth noting this, that unlike bonds and SACCOs and money market funds, rates returns are not fixed. They keep varying. And their dividends, rates dividends are not guaranteed, but fluctuate based on the performance of the underlying real estate assets. So while we have 11.4 and 11.1% in Ilham Fahari I-rate and Econ D-rate, I chose to go with 8% return, the bare minimum 8% return. So 8% return of 750,000 per annum will give you an annual return of 60,000 Kenyan shillings per annum, that is per year. What does rates provide? Rates provides capital appreciation and potential rental or dividend income. And this will give you a hedge against inflation and a path to tangible wealth. So we've done 15%, which is giving us a potential of 60,000 per year. Now that we have done rates, let's move to the other vehicle. And we are doing 9%. We are investing 9% in special funds. We've done a video on how to invest in special funds and the top performing special funds in Kenya. I would allocate this money to a special fund that is regulated and is well structured. Why? Because special funds are known to typically give the returns of 12 to 15+% annual returns, but these come with risk and slightly higher risk. The examples of, I've done a video on types of special funds. We have got Manta X funds, OC funds, Mele, and Kuza. I'm not promoting any of them. I'm just sharing information on the types of special funds that are available. When choosing a special fund, make sure and stick with special funds that is regulated and approved by Capital Markets Authority. Now, step number 2, review the fact sheets and understand the exit terms before committing to a special fund. A special fund will give your portfolio an extra performance boost without overexposure. So, and this is what we are looking at. This is how our portfolio will look like. So our special fund is right here with us, because this is rates. The blue one is rates. The green ones are the Treasury Bonds. Let's go to so the rates are the yellow blocks. So let's go to the Nairobi Securities Exchange, which are our green Legos right here, second last. So I would invest 10% of my 5 million into Nairobi Securities Exchange. So the 10% of that, I think it will be 500,000. So I will invest 10% in NSE. And when doing this, I will choose blue chip NSE stocks, such as these are companies that have been proven to pay well over a long period of time, such as Safaricom, Equity Bank, KCB, East African Breweries Limited, and NCBA. The goal here when investing in NSE is a long-term growth through dividends and capital appreciation. You can as well diversify to ETFs or rates, which offer broader exposure but with less volatility. I did a research on the best performing NSE companies in 2024, just to understand the yield, the dividend yield in a percentage. So Standard Chartered Bank paid a 16%, is in the banking industry, paid a 16% annual return. BAT is a food, beverage, and tobacco, paid at 12.8% per annum in 2024. Stanbic Holding paid at 11.4%. Bamboo Cement paid at 9.7%. Absa Bank, my final one, paid at 8%. It's also in the banking. Just the last one, because it's on the list. NCBA Bank paid at 8%. It's also in the banking industry. So from 16% up to 8%, I went with the lower percentage of 9%. So an investment, and when I pick a return of 9%, my 500,000 that I've invested in the NSE will give me roughly 50,000 Kenyan shillings per annum as the return on investment. So finally, we've done 99% because we have done 20%, 20%, 25%, 15%, 9%, 10%, and finally 1% on personal development, capacity building, and skills development. So that's where I'm allocating 1%, and this is equivalent to 100,000 Kenyan shillings. Where do I put this money? I will allocate this money in a number of ways that are productive to me as an individual. This could be business or leadership masterclass, a mentorship, a mastermind, or a high effective course. This could as well be a mentorship or a coaching program. I could attend a seminar on personal branding, personal growth, or if you're a person in business, just a mastermind or a masterclass in coaching. Why? I always say that investing in yourself is one of the returns that will compound massively over a long period of time, because better skills will lead to better decisions. Better skills will lead to better deals. Better skills will lead to better returns, and to lead to better decision making. You are the asset that determines how everything else performs. Your ability to decide that you are investing in a money market fund, or in a SACCO, or in treasury bonds, or in rates, or in treasury bills will determine on the ability that you have that knowledge, you have that skills, and you have that know-how and mental capacity, ability to invest. If you are someone who is in business, you need to have the knowledge, the know-how, and the expertise to run a business well. And this is where you invest this particular amount of money. So this is the bigger picture of what we have done. We have done 20% in a money market fund, 20% in SACCOs, 25% in treasury bonds, 15% in rates, 9%, 10% in special funds. That should be 9%. Then 10% in stocks, and then 1% in personal and skills development. This is a mixture. Your portfolio will look like this: a balanced portfolio that balances safety, income, long-term growth, while at the same time dedicating our 1% on the far end to skills development, developing your skills and your ability to maintain this other portfolio. So this is how your 5 million investment portfolio will look like. In terms of returns, now that you have invested this amount, how will returns look like? I did a basic arithmetic. So money market funds will give you 90,000 per annum. SACCOs will give you 100,000 per annum. Treasury bonds will give you 300,000 per annum. Rates will give you 60,000 per annum. Special funds will give you 54,000 per annum. NSE will give you 50,000 per annum. Cumulatively, this investment of 5 million Kenyan shillings will give you 650,000 returns per annum. This is an average of 13% returns, and at the same time still preserving your 5 million Kenyan shillings in the particular assets that we invested in. So in conclusion, If I had 5 million Kenyan shillings to invest, this is exactly how I will invest. I will look at stability, I will look at income returns, then I will look at sustainable growth over time. So, your portfolio investment, this investment portfolio should not just make money. At the end of the day, this portfolio should not just make money, but it should build a system around you. It should build a system. You should build skills and build opportunities that last decades and give you returns that will be able to serve you better. So, as we conclude, diversify intentionally within the asset classes that we've talked about. So, diversify, protect your capital, and always remember that money invested in yourself, remember this last investment, money invested in yourself multiplies faster and gives you better returns than anything that you ever invested on. Thank you for watching this interesting part of this series. If someone would benefit from this, share with them this video, subscribe if you haven't, and I'll see you in the next series. If there's a particular amount that you personally would like to know how to diversify the investment portfolio in, share that in the comments and I'll do a detailed breakdown on it. Until next time, I'll be seeing you soon.